Tata Steel is the next counter we're talking about, and this is to Lancelot. Lancelot, this is a question from Shashank, and he's bought at levels of 130. And the stock is currently trading above that price, of course, 168 or thereabouts. Certain issues from the overseas business notwithstanding, is this a good company to hold for the long term?
Yes, Alex, I think it is a good opportunity to continue to hold for the long term because, while they have been trying to resolve their issues regarding the UK plant, there is significant improvement in the cash generation. And that cash which is being generated by Tata Steel is being used to pare down debt. And that's making the company financially more attractive, as well as you are seeing a significant growth in the domestic market, along with improvement in global prices for steel, which will hold the company in good stead for the next year or so. And we see that improved margins, improved cash flows will help in terms of financial, the budgets, the financial balance sheet being stronger. The company also has an expansion program in India, both in terms of debottlenecking of its plants as well as setting up new plants, and that should augur well for Tata Steel. So even in the longer term, one should continue to hold this stock.
That's a hold on Tata Steel from Lancelot. The next question is on IREDA. The question is from Narendra. Now, the question is, should you continue holding on to it or should you sell? Rajat, we've seen a rally in this counter in the last year itself. It's up, over 400%. Now, while I do not know the buy price of the viewer, considering if it's a profit, should they maybe take some money off the table?
Well, that would be the best thing if one can control one's greed. But as of now, you see this movement that has started happening from late June and throughout July, this is moving up in a parabolic fashion. This kind of thing is, this suggests heady momentum in this. This momentum, when it will stop, nobody knows. But if you want to play this kind of a stock, then I would suggest you book part profits, at least your cost of acquisition for the other stocks, the remaining part remains much less, and you have risk also much less, and then carry on. And whenever there is some kind of a problematic sign on the trading activity, exit fully. That is how you play this kind of stocks.
Would you also suggest doing the same thing? Considering we've seen the valuations, now it's extremely expensive at this point, but FPI seem very positive on the counter. Would you also suggest holding on to it and maybe take some money off the table?
Lancelot, that's for you.
Oh, so as far as IREDA is concerned, I think since valuations are high, definitely one should look at, trying to take some profits off the table. Because having bought at a lower price with profitability, you can either look at cashing out and keeping the money aside. So whenever there's a correction, you could either re-enter the same stock, or you could be presented with other opportunities that provide fair risk-reward ratio, and that money could be deployed there. Okay. So I would definitely suggest profit booking is a strong option one should look at this point in time.
Yeah, and there's no dearth of buying in the stock. It's up as much as 5% in trade today as well.